Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And if you'd like to learn more about gold and silver, please follow us on X. And then you can also go to guildhallwealth.com, get your investment kit, learn how to hold physical gold and silver in your registered account. It's fully allocated, fully segregated. There's no counterparty risk. You own it. You can hold it in your hand, go to the vault and personally audit your holdings. And you can also give us a call directly. We're more than happy to chat about the markets and chat about how to get involved in the markets. And you can do that by calling 18778-SILVER. And Jerry, an interesting week in the markets. The silver price as we record today on Thursday is $31.20 per ounce. Silver is, that's in US dollars. Silver is up 35% in Canadian dollars this year. Gold, we're trading at $2,630 per ounce US. It is up 35% this year as well in Canadian dollars. And just before we went on, we were having a little chuckle about interest rates because it looks like the Bank of Canada wants to lower rates any moment now, which would be an indicator that I said to you, it's because, well, they've reached their cruising altitude. They've reached their target. Inflation has been tamed.
Yep, under control. Nothing to see here. Let's get back to work. Let's start cutting rates. And this is an anomaly we're seeing because prices are still going up. Cost of living expenses are rising. Yet, on the other hand, according to our central planners and the Bureau of Statistics and CPI, they all point that everything's under control. The prices are going down. No, it's not. And, according to their measurement, inflation is going down, but it's not the case. Prices continually rise. Coffee prices, I don't know if you saw that statistics. It's up like 70% year over year. The cost of living expenses it's really choking people out. We're seeing it. We speak to people on the regular here at Guildhall who are, stretched thin. People have to, unfortunately liquidate some metals, which is the whole point. You have liquidity in precious metals. You have that stability. But right now, the central planners have just lost it. The currency, if you look at gold versus all major currencies right now, the pound had just got smashed to lost about 7% versus gold. All major currencies are facing the same headwind on the way down. And it's just the US dollar that's actually the one that's doing the best out of all of these losing currencies.
But on that point, you follow the currencies quite closely, and the US dollar is sort of at a peak right now in terms of when you're looking at the charts, right?
It did come off of the 2-year high just following the Trump election news. The legacy media and legacy financial media conjured up that because his platform is usually expansive, that he loves to expand the monetary policy, which is the case, that it's inflationary, but his central bank for some reason is going to be keeping rates high and raising rates. And this is actually a headline from Bloomberg today that the Trump trade is going to be inflationary, and therefore it could be hawkish on the interest rates, that his policy is somehow hawkish. That's not the case. If you look back in history, from Reuters to NBC to CNBC, CNN, all pointed that actually Trump he loves low rates. He loves negative rates even. He wanted zero or negative rates, and he lambasted the central banks, the Federal Reserve and Powell, to, get this thing cut. He knows what he's doing. He likes to manage the debts. He likes lower rates. So to have the US dollar hit 2-year highs on a notion that he's going to keep rates high, I don't buy it. It's definitely buying the COMEX and all of the exchanges a lot of time, because there was a huge drain of precious metals coming out of the COMEX just before the election. Huge panic from the COMEX. So it was just in time, and it was a lot of shorts that had to come out of those trades as well. So, we're level-headed here. We just see right through it. The central planners are caught between a rock and a hard place, and we'll see what they're going to do next week. Bank of Canada is going to cut rates 25, 50 basis points, who knows? But
Well,
that just bodes very poorly for the Canadian dollar.
Well, yeah, exactly. It means that we don't necessarily have to see a decline in the US dollar. If we lower interest rates, it means our dollar's going lower. Everything is going to get more expensive. The rate could go to 1.42, right? Everything gets more expensive. And as the Canada Post negotiations hopefully wrap up, I imagine we can almost guarantee that costs for stamps and sending packages is going to go up as a result, right? Everything is going up, right? It's you can't say that inflation's under control if prices are going to continue to rise, because we still haven't gotten through, as you can see with this negotiation with Canada Post, is unions want raises. They want cost of living raises, right? So that's going to continue.
It is continuing, and I just want to bring to the table an article that came across Yahoo Finance yesterday. Mexico raises its still low minimum wage by 12%, but it marks no increase in dollar terms. Mexico announced Wednesday that it will increase, finally, minimum wage by 12%. You think that's a huge win, right? 12%, that's great. But unfortunately, the Mexican peso, on the other hand, lost 18% in value over the last year. So you get 12, but you're down 18%.
And we're in this era where you're either, and this goes back to when they lowered interest rates to zero and in some places negative, that you're either forced to chase yield or you look for protective assets. And that certainly seems to be the exact same case. It feels almost 2018-esque in the markets right now. And one of the ways that if you're looking towards retirement, you're trying to create retirement planning and you're thinking for the future, one of the best ways to make sure that you're preserving your wealth long term is to hold an asset like gold and silver, because they are limited supply, because they're used, they have no counterparty risk. They really are the insurance of a portfolio. And if you want to have that insurance portfolio and get the benefits of holding a hard asset like gold and silver, which are up, well over 400%, 600% for gold over a 20-year period. They're doing great this year. We're going to look at some forecasts later on in the show and show you where we believe they're headed into the future. But if you want to get involved, you want to call the number 1-877-8-SILVER and the website guildhallwealth.com. Jerry, coming up in the show, we want to talk about this video that you just watched and give us a little hint of what you want to discuss.
Yeah, just so I want to get into that video that I watched earlier, just referencing what we're seeing right now, a lot of euphoria and a lot of just over exuberance with what we're seeing in the stock market. We're about to engage in another series of rate cuts, which is usually it is normally a response to emergency issues or an issue in the market. So there's an emergency tactic to cut interest rates, but in a time of a boom, this is not a time to really cut rates. You really want to let things go. However, what we're seeing in the markets, in this extreme euphoria, price distortions. We have the media telling us that inflation's under control, but prices are going through the roof. There's too many distortions. So this video that I wanted to touch upon a little bit, I wanted to go over it because it was very reminiscent of what I can remember when we were witnessing the things that are what were happening in Venezuela, when we saw one of the most astounding stock market run-ups surging over 200,000% in a very short period of time. This happened several years ago. So the video goes over what a crack-up boom is. What is a melt-up? What is that? Where did it happen? Has it happened before? Can it happen here? Is this going to happen? Can this potentially happen in North America? Is it just something that happened in Europe or in Asia or in South America? Can it happen in North America? And if so, how to protect against it and why real money, gold and silver matter during this time. And it does matter because just last week, after all of this diversion, all these distractions, we noticed heavy repatriations happening around the world. Most notably was China, repatriating silver and gold back into their coffers, back into their reserves. the COMEX, as I mentioned before, the LBMA is being drained, and this is a very big issue, especially for the military, that requires the immense amount of ounces going into their artillery. Jeremy, you mentioned that before in the last week's show. We're going to get into the crack up boom, but I think it's a great time to talk about the demand coming from China.
Yeah, I think, last week on the show, we talked about that China invested $1.5 billion into a deep water port in Peru. And last week they took out of that port 2,600 tons of silver concentrate bound for Shanghai. They also took delivery of gold, and which is just astounding. Something like they secretly bought 60 tons of gold, which is just shy of 2 million ounces of gold. So they're clearly preparing for something, and we want to understand what it is that they could be preparing for and why they feel it's so important to have gold and silver. We think it may be part and due because of what a crack-up boom is, and also geopolitical risks and a changing monetary system. I think that's where this is all headed, a changing monetary system. And how is that going to play out? And one of the things that we've learned from history is he who owns the gold makes the rules, just as JP Morgan himself said, gold is money and all else is credit. So you want to be prepared. You want to have a foot in the gold and silver game. You want to be hedged. You want that insurance policy. And with Guildhall, we can help you into that market. It does need some hand-holding sometimes. People do need to learn about the market, how it works, pricing, because it is a physical asset. It's not investing. It's ownership. It's tangible assets. Give us a call. We'll show you how to do it. And we always recommend a crawl, walk, run strategy. Start small, and then you can build from there. And you'll see how you want to move from in what direction you want to go and where you want to put gold and silver in your portfolio after a few small moves. The number 1-877-8-SILVER, the website guildhallwealth.com. If you're thinking about holding physical gold or physical silver in your registered account to hedge against inflation, hedge against the devaluing currency, prepare for a new monetary system, looking at the fundamentals of physical gold and silver, for example, Jerry, Gold Silver HQ put out a couple of crazy good posts over the past couple of days. The first was silver, the most undervalued, most shorted, most essential metal on earth. That's not a problem. That's an opportunity. I'm sure you've seen that video.
It's good.
I think the guy was being interviewed with Joe Rogan, and he was in the military or something. And I think it was about stoicism, where your answer to everything that's bad is good, right? So you say, "Oh, it's most undervalued." Good. It's
good.
Right? it's almost like all right. It's most shorted. All right. And that's it's like all right. The other one they put out, Gold Silver HQ, was the silver short squeeze is coming. Industrial demand is soaring. Above ground silver stockpiles are vanishing. The cracks in the manipulation are growing. Buckle up. And speaking of just the cracks in the manipulation, you probably heard, actually, I don't know if you have, did you hear, Jerry, that the CME wants to launch or is going to launch a 1 ounce gold futures?
I just saw that today.
Okay, so they say it's to meet surging retail demand. To me, isn't that just a way to steal money from small speculators? And if that's the case, doesn't it mean that the big boys are tapped out?
Quite desperate, isn't it?
It's quite desperate. It's like that new investment vehicle where you can buy partial stocks,
Fractionals, yes.
Fractional stocks. Being able to buy a fraction of a stock where we're going to remove the barrier to entry is, to me personally, a huge whopping neon sign that things are overvalued. If the everyday person can't get involved in the market, I don't care how you spin it. To me, that says, how can we get the last grains of sand into this jar, right? We got the big rocks. We got the pebbles. Now we're going to fill that jar with sand. We're going after the little guy, right? It means the big guys are tapped.
Exactly.
We've got all that liquidity. So if you think now is the time to protect yourself and prepare with the insurance policy of gold and silver, even after you've started to see those first initial moves, the market's still incredibly undervalued, and we could give you 100 ways as to why that still is, then we have an even bigger reason to get involved in the registered accounts, which is we now have a promotion, the Get Your Free Gold promotion, Jerry.
I love it.
It's back. For every $15,000 US put into your RSP to acquire physical gold or physical silver, we will give you 1 gram of gold.
In your hand.
In your hand. You can use it as a last-minute gift. You can hold on to it. But it is an appreciating asset. And speaking of that, Jerry, I remember when my wife's niece was born, we grabbed a 5-gram bar. I think it was I can't remember. I think it was like $250 at the time.
Yeah.
I think it's worth like $700 plus now. Yeah. So, it doesn't seem like it's a good gift.
No.
But, one day
it's very thoughtful.
She's gonna understand what that asset means when she says, "Wow, my auntie and uncle were the best," right? Because all the other cash is gone. All the other cash is gone. It's worthless.
Exactly, and that's the point. I mean, you don't want to give cash, and they just spend it on menial things.
Best holiday gift
Yeah.
you can think of is to give a couple silver maples, give an ounce of gold, give something that's rising in value that they can hold in their hand and get that first initial aha moment of what this is all about. But if you want to take advantage of that promotion, you give us a call, 1-877-8-SILVER. You go to the website, guildhallwealth.com, and it's a perfect time to get involved in the precious metal market. You've got every reason to get involved. And Jerry, let's talk about crack-up booms. First of all, what is a crack-up boom?
So this is a term that was made famous from Ludwig von Mises, the Australian School of Economics. He went through the Weimar Republic, hyperinflation, and he talks about when everyone wakes up, in referencing all of the bubbles that we're seeing. People become suddenly aware of the fact that inflation is actually a policy and will go on endlessly. And this is what we're seeing.
Interesting.
Breakdown occurs and the crack-up boom appears, is what he says. Everybody is anxious to swap his quote-unquote currency or money against real goods, real money, no matter whether he needs them or not, no matter how much money he has to pay for them, within a very short time.
So I've had clients come in, they were born in Eastern Europe, and they've gone through periods where they'd say, they would get their paycheck or their mom would get their paycheck and they'd spend it right away.
You have to.
They'd just go out and spend it because otherwise it would be worthless by the next week. Is that what we're talking about? Because that just seems like hyperinflation, not what you're calling a crack-up boom.
Well, it was a both. Crack-up boom is a symptom of what was going on with the currency, similar to what we talked about with the peso. People needed raises. They got 12% raises, but the currency was actually destroyed by 18%. Eventually, we realized that this is a policy. This becomes a fear factor at this point. So people are rushing, and it becomes mania. And there's a list of not just Venezuela, of hyperinflationary bubbles, and we've seen the stock market in Venezuela bounce up 200,000%. The people euphoria. What we're seeing today, I'm not suggesting that this is exactly what's happening today as we're hitting all-time highs, but the way that we need to value our wealth would be looking at the currency. Are you valuing our wealth in this currency that is being destroyed? That's what was happening with the Bolivar during the time. And there is a list of melt-up booms and crack-up booms throughout history. We have Hungary from in 1946, famous Zimbabwe in 2008, Yugoslavia in 1994, and then we've had France, China, over the course of history. And this is history showing us what happens when the same philosophy applied. When you just expand the monetary supply, when you hit 36 trillion, and when everything becomes a fraction of something. And when we talked about the silver squeeze, the physical silver stocks that we're seeing are declining significantly year over year. And we talk about the opportunity versus what we're seeing right now, not to just protect versus this crack up boom versus the loss of your purchasing power. But the decline in silver, especially since that silver squeeze began in 2021, which caused historic tensions around the world. The LBMA nearly shut down. We know that today's silver market is based on fractional systems. They say it's undervalued, Jeremy. It's not undervalued. Silver is priceless in terms of all of the usages. And if we look at usages of, for example, Bitcoin, if according to, I did a little bit of research of the usages of Bitcoin and other digital currencies. It's a digital currency. It's a store of value. You could trade with it. It's all financial. Whereas the utility that we have in gold and silver, it's enormous. It goes into every single industry. And when we have a market that is based on fractional systems where there is more virtual owners of silver than the actual physical ounces of the actual metal itself.
Are you talking about the LBMA where they've got 400 paper ounces for every 1 ounce?
LBMA and the COMEX, that's indeed what happened.
Right.
But the LBMA wrote during the silver squeeze that if had this continued, had the squeeze and the drawing of the silver inventories continued, then they would be in a default position. They were that close, Jeremy. And considering what was going on just before the election, this is the same type of environment that the silver and gold market, the stress and duress the silver and gold market was. So, of course, we need diversions. We need distractions. But, in a very, very short period of time, the currency can become useless.
So here's a question for you. If we're talking about a crack-up boom and you're seeing stock markets continue higher, and I'm seeing all of these posts about insiders selling at a massive rate. So how is it that the stock market's still rising if all of the insiders are selling? And I don't think Main Street's really investing all that much. They're worried about inflation.
Mm-hmm. Exactly. The average person is not worried about...
So what's pushing the stock market up, do you think?
Well, you have a lot of printing, Jeremy. The printing press is back on and running. They have to save this U.S. dollar. The U.S. de-dollarization is real. Someone's got to buy the treasury.
So you're thinking it's bank plebs on behalf of the Federal Reserve and its open market committee and all that jazz are basically just, okay, what stocks can we buy up with the debt to push it higher? And it's always a small fraction that can push it higher.
Yeah, I think, when the audits get done.
Or is it just putting all the money into NVIDIA?
It's yeah. Bubbles abound, Jeremy. Everything was just artificially birthed and bubbled up, because if we even look at what happened in China, in Japan, the experiment that was done with the yen, if you can lower your rates to negative, you can borrow that and really finance anything in the world, and you can make bubbles around the world through just one currency. Imagine what's been going on through other currencies.
So what's the takeaway here? We've seen crack-up booms happen in the past. We've seen hyperinflation in the past. How does it generally end? How do we get back to a sense of normalcy? How do people protect themselves?
Well, it's through real assets, and that's why in Ludwig's missive here, everyone's anxious to swap money against the real goods. So there will be a rush to real goods and a real quality of goods. And this is the reason why gold and silver are tier one assets. You have the immediate liquidity that you need in a market. When everyone wants to head to the door at the same time and liquidate because there's panic and panic ensuing, and you need some tangible wealth, or the power goes out, the panic is real. So converting out of physical or out of fiat or out of digital into something tangible, because if you can't hold it, you don't own it. Ownership is key. When all of these bubbles abound, all it takes is one pinprick and the cascade will happen. I think the cascade's already happening, and I do believe we're already in the midst of a currency crisis.
And again, as we mentioned, Gold Silver HQ, I love what they said. The short squeeze is coming. You mentioned, Jerry, the short squeeze, that industrial demand is soaring. Above ground silver stockpiles are vanishing. The cracks in the paper manipulation are growing. buckle up. Silver is the next to see a massive crack up boom of its own. The only difference is it's real money. It's a real asset, both industrial and monetarily. We're now even seeing different states. I think what was it? Missouri is looking to get rid of central bank digital currencies. They want to write a law you cannot ever have them, and that they want to return gold and silver to its monetary historic roots and have it be used as money, which is very interesting. I believe it's Missouri. I'm going to check on that, and we'll talk about it in the next segment. Also coming up in the next segment, let's talk about central banks. They're ramping up their buying, but there's also debate amongst central bankers as to the use case for gold as money. And we're going to get into that debate in the next segment. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Physical gold, physical silver, assets that have no counterparty risk, no liability, no one else's has a claim on it. This is your asset, your insurance policy for your wealth, for your retirement. You have to think about your future. Gold and silver will insulate you against troubled times ahead. The number, 1-877-8-SILVER. The website, guildhallwealth.com. If you're thinking about holding physical gold and silver in your registered account for your retirement, think no more. We've got a great promotion for you. For every $15,000 US invested in physical gold and silver, you're going to get a gram of gold. Now is the best time to get involved. You know, Jerry, we just saw gold reach a high of 2,800 plus. We've had a pullback. This is as good as it gets. You want to buy the dip. You want to get better rates. You want cheaper prices. You got to get in on the dip.
Absolutely.
It's as simple as that. Now, will most people do it? No, central banks are doing it. There's no doubt about it. We had a post here on X from Frank Justra saying central bank gold buying ramped up in October. India, Turkey, Poland lead the net buying of physical gold. And that comes to us from gold.org. Now, Jerry, we're seeing central banks buying gold, but there's some debate around whether or not they should be buying gold. You know, we have this beautiful history of central bankers in America making outlandish comments about precious metals. I don't know why they're so anti-precious metals when all these other central banks are. But let's have a debate between Jerome Powell, Greenspan, and Bernanke.
Let's do it.
Let's do it. So this week, Jerome Powell was interviewed, I think yesterday, and he said, people use Bitcoin as a speculative asset. It's like gold. So Jerome Powell just basically said that gold is a speculative asset, Jerry. What do you make of that?
What I make of it is just a central banker, another Federal Reserve chairman. A lot of hot air coming from him, of course. They really never say anything positive about precious metals. That's the case until they leave the office. Then the truth comes out. He actually also mentioned that that gold is actually competing against the U.S. dollar. So that was another case.
Which is like what Nixon said when he lifted the gold standard, saying that they had to defend against the speculators, right? The hoarders of gold.
And Bitcoin is a competitor to gold.
And they're both speculative assets, basically. So now, what's interesting is Greenspan, we're going to bring him in on the debate because he completely disagrees. And he asks the question. Now, we know in the past some of his quotes, things like the only thing to protect you against inflation is gold. We also know he was an Ayn Rand enthusiast and wrote an incredible paper on the uses for gold and silver or gold as a backing the currency and having a gold standard. He's definitely... Go ahead.
I like the Greenspan one where he says, I view gold as the primary global currency. It is the only currency, along with silver, that does not require a counterparty signature.
There you go. And he said that actually there was an interview in 2014 when gold was at under $1,200 and silver was under $16, where he asked the question, why do central banks put money into assets that have no rate of return and they have to pay to store them? Why? So I'm having him ask Jerome Powell, hey, Jerome, if it's a speculative asset, then why are these central banks putting their money into an asset that doesn't pay interest, it doesn't give you a dividend, and you got to pay to store it?
Why? Yeah, why?
I don't know. What do you think? What do you think Bernanke would say?
It's just, his reply would be, "It's just tradition, Jeremy. We just have to. This is what we do. We just have to pay for it."
Yeah, look, you've got a couple of central bankers, including Janet Yellen. She never talked about gold specifically, but she is famous for saying that there would never be any sort of market collapse ever again.
That's right. What a crazy woman.
She's a crazy woman. Thankfully, she stepped down, right?
Yeah, thankfully.
So
it reminds me the whole storage. I had the conversation with someone because they're analyzing their expenses these days. They're cutting subscriptions. They want to make sure that, we're running a lean machine here. We got to cut this and that. No excessive spending, especially we're heading into the holidays. We got to make wise purchases. So I had a conversation about it's usually something we do at the year end, and about storage fees and rates. And, I put everything into perspective. I'm like, listen, you're up 35%. Your portfolio is well in the green, and we have a lot of topside potential in precious metals. And, if you'd like, you could just take it out. If it's a TFSA, you could just take it out. She's like, no, actually you put things into perspective, because I paid 1.25% to store it. And I'm up 35% on the year. And if I compare it to other investments where I would be paying, in a mutual fund, maybe 2%, the 2% you're paying to really, it's just commissions and to shuffle paper. But when you're holding gold and silver in a storage facility, it's very similar to paying, a boat marina fee. If you own a real asset, this is the cost of owning the real asset. You have to have insurance on it as well. So it puts everything to perspective, but you're not going to compromise on your insurance policy for your wealth. If you wanted to lower the cost, you would have gone into the paper market. You would have bought an ETF, a silver ETF, where we're seeing drainages out of the ETFs.
Well, the thing is there's always a way to do it for free. You just won't own anything.
You won't own anything.
Right? You just won't own it. You can buy an ETF. You can do a pool account. You can do a gold-backed fund. All of these things are fantastic, but you just don't own anything. So it's really great for those who want to get exposure, don't really care about actually having the insurance policy. It's like saying, I don't really care about my car insurance. I'm just going to invest in State Farm. Right?
That's the company itself.
I'm just going to.
I need a policy.
Yeah, I need insurance. I'm going to go invest in the insurance company itself. Yeah, good things are coming in the precious metals market. There's no doubt. I'm always very counterintuitive with these things. When I see pullbacks, when I see negative talk, when I see the complete lack of discussion in the gold and silver market, I think that there's something big ahead. And so I'm very excited about what we're going to see in the future, especially for 2025 in gold and silver. And in the next segment, let's talk about some forecasts coming up for the next year, because I believe CIBC just jumped on board with a conservative estimate, but nonetheless, they see it moving higher. And I think that that's a good sign, because even when the banks are calling for conservative estimates higher, that's really good for us. Also, in the next segment, Jerry, I want to have a brief discussion on supply. Is the increasing supply of gold over time a bad thing, or is it a good thing? Because sometimes people will say, well, there's an expanding supply. That's not a good thing.
It's got to be fixed.
Let's discuss that in the next segment. The number 1-877-8-SILVER, the website guildhallwealth.com. If you want to get involved in the registered accounts, for every 15,000 invested US, you're going to get 1 gram of gold. And of course, you can have access to go and personally audit your holdings and really see that physical metal and know what you're paying for. So there's certainly some euphoria in the stock markets, Jerry, and some other assets around, and it's always good to diversify and be prepared. And we've always seen gold and silver as an insurance policy, certainly one that has paid out over the years. And when we look at the fundamentals in terms of money printing, interest rates going down, you've got geopolitical risks always on the horizon, especially with all of these deals and negotiations that are going to be happening. They always say, he who owns the gold makes the rules, and we see central banks loading up like crazy. There's so much good things ahead. Even if you think that the next few years with the Trump administration are going to be great and positive, and that there's going to be economic expansion, then you tell me where you're going to get the silver to put into all of these new technologies that are going to come out. I can only imagine, and I think that's going to, there's no doubt, the back of the silver manipulation, which, by the way, it's not doing so great. We've gone from 15 to 30 in the last couple years. But it's when we break 34, that's really the worry, right? It's that we've gotten to 31. They've kind of, okay, we're going to stick in this low range. It's when they break that's going to be a big concern. Now, CIBC came out with a forecast, and they're looking at what gold will do under a Trump administration, and they've said that it's going to flourish, and they think that you're going to see $2,800 an ounce next year. Now, we've talked about that Bank of America sees it going to $3,000, and Goldman Sachs sees it going to, I think, 2,800 as well. So these are conservative estimates.
They're conservative, which is always the case. They have to be conservative, but they have to be in line, and they have to be in the in crowd, Jeremy. They can't be on the outside. They have to follow the trend, and the trend is definitely higher for precious metals. And I agree with CIBC regarding this with the new Trump administration. Gold is going to have a big role in his administration, in our opinion. With the likes of Judy Shelton and other advisors, states are moving in line with removing taxes. You have the Gold Standard Restoration Act already in place. Things are moving in his favor. And historically, he has very negative rates. He likes to cut rates. He loves lower interest rates. And gold and silver are inversely correlated to the U.S. dollar. So if you're cutting rates, you're dropping the dollar. Gold and silver would head higher. And that's what we're seeing as well with other forecasts coming from UBS that prefers gold to Bitcoin to mitigate against volatility. We're going to see a lot of volatility coming up. And you want to mitigate against volatility as well. Macquarie, also bullish on gold. 3,000 is their target as well for 2025. Potentially challenging that mark. They're citing Fed rate cuts, central bank buying, and huge Chinese demand as well for the physical. Morgan Stanley also on board with their forecast, eyeing 2,700 for the first quarter of next year. So that's right around the corner, along with Goldman Sachs as well. But, in a rising environment with inflation is just going to continue. And with volatility happening, the reason why central banks are looking for gold and silver, the reason why they need the gold as a reserve, number one reason is liquidity. Jeremy.
Look, this is about protecting wealth, 100% protecting wealth for the future. And this is why people would always benefit by having 10-15% allocation in their portfolio. Jerry, one of the debates against gold would be that it has an expanding supply. And I looked into this because I was watching the video that you were looking at, and I wanted to just quickly say why expanding supply is a good thing. Because if you don't have an expanding supply, what happens is you discourage economic growth, because what'll happen is that the value of that money will go up because it's so limited in supply, and that's going to end up having negative effects on the economy because people will put their money into the money, right?
Speculation.
As a speculation, because they don't need the economic activity. They don't want it. It's the value of the money's going up, so the economic activity stops and you get deflation. Mm-hmm. And I got to tell you, I don't think that's what Trump wants.
I don't think so at all. No, that's not his policy.
So, it's proven over time that a 1 to 2% annual supply increase has preserved purchasing power for centuries and for civilizations. Scarcity with flexibility. This is what you want. It combines the enduring scarcity as well as adaptability, meeting dynamic economic needs, and it avoids these extremes, avoids the extreme of the value of that money is just increasing because there's none of it around, right? So you want a little bit of expansiveness in your money base. Now, luckily, gold goes up at about the rate of the population growth.
Interesting, isn't it?
Which is interesting, and you could layer on top of it a currency which is also flexible, right? You have a currency on top of it which you can expand, create some debt or create loans, take those loans back, but you need to have
a fixed weight.
Yeah, exactly. So that's some good things. So when we look at we're seeing lots of great projections in the market for gold and silver. Silver has never looked better. I think that buying on the pullback is going to be key in this market. And if you have a pension account that you've ignored for several years, go take a look, see how it's performing. People, I'm sure, are looking at their stock market portfolios for the year. What's working? What's not? If you have something that's not working, maybe now's the time to look at holding physical gold and physical silver. It is no nonsense. It's practical. It's a strong asset to have in your portfolio, and certainly the gains over the years have been incredible. But they're only going to get better from here. Jerry, some last thoughts.
You want to get real money in your portfolio. When we have the monetary system and paper money systems are cracking at the seams, the run to gold will be explosive. That's what Harry Brown said, permanent portfolio investment strategist. And you want to implement the same strategy as central banks, acquiring money. Divisible, portable, durable, recognizable, and scarcity. And that is the key.
And a slightly expanding supply.
Yes, slightly expanding.
You need a slightly expanding.
The only tangible, non-financial asset that is always liquid and practical to own without ever involving the financial system. This is carving out your own independence for your own future, for your future and your family's future. That's what it's about here. And we want to help you along the way. Our family wants to meet yours. Come on in. The coffee's always on. The commissarial's always going and flowing. So give us a call. Enjoy the holidays. There's nothing to fear. Just get some silver and gold in your portfolios, and we want to be here to help. So give us a call.
The number, 1-877-8-SILVER. The website, guildhallwealth.com. If you've missed a show or want to listen to it again, you can catch us on YouTube. You can catch us on Rumble. You can catch us on Spotify. Thank you so much for listening. Please follow us on X. Can't wait to speak to you next week here on The Real Money Show on 640 Toronto.